Hims and Hers officially launched their new product category, testosterone, today. Going to be really interesting to see if this is going to be able to be the next growth driver for the company. If you remember going back to 2024, that was when they announced that they were getting into GLP-1, more weight loss products. Weight loss didn't even start for Hims and Hers until late in 2023, I believe was when some of their oral solutions started coming out. Then GLP-1s came in mid-year 2024. That's been a huge growth driver, but a lot of questions over the past few months about how much that growth is going to continue after compounding. That exemption was ended kind of at the end of the first quarter, beginning of the second quarter. And now we move into a phase where a lot of the traditional pharmaceutical companies are fighting back against compounders like Hims and Hers, but adding a new category could help them boost growth at the end of 2025 and into 2026. I think this could be another one of those categories that really fits Hims and Hers really well. It's a category that's tough to talk to a doctor about. There's privacy concerns involved. So Hims and Hers got started with ED meds, now moving into testosterone. I think this makes a ton of sense, but we don't know exactly where it's going, but I want to give you the details on what the products will look like. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. Thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. This is the announcement that came out this morning from Hims and Hers, the new standard testosterone treatment. So there's going to be these 4 offerings. These first 2 are available today. So this first one, enclomiphene, is going to be available just kind of on its own. And then this other one kind of adds in an ED treatment as well. I think the interesting thing here is this is not just bringing a new treatment to Hims and Hers. This is incorporating some of the other solutions they have brought in-house. They acquired an at-home testing company earlier this year. This is the first big use of that. Customers begin with a simple at-home blood test and get results in days instead of months, and then work with their provider to find the best treatment plan if eligible. So the way that this works is you go in, you answer a bunch of questions on the Hims app, and then if this product might fit you, what you actually do is you sign up for a subscription, and then as part of that, they send you an at-home blood test. Once they get those results, then they can officially give you a prescription if low T is something that needs to be treated. So this is something that they say affects 20 million men just in the US. So potentially a big market. They're selling some of these products for about $100 per month. So it could be a real big boost for Hims and Hers, and is relatively low cost from a prescription standpoint as well. Next year, they're going to be expanding this into some other products. They have a partnership with Marius Pharmaceuticals, which is going to bring their branded product onto the platform. And this is a needle-free FDA oral testosterone replacement therapy that's shown to restore testosterone levels in most men. So you can see here, this is what the at-home test looks like. Just a little vial that sticks on your arm. Andrew Dudum actually did an entire blood test that showed some pictures with his entire family at a gathering. So this is something they've been working on for a little while now, and now is starting to be brought to the mass market. Now, there are a couple of reasons that this could be important for Hims and Hers. One is just simply the number of subscribers. One of the ways you want to judge the success or failure of Hims and Hers is, are they able to continue adding subscribers? I've talked about this as a company where you want to buy companies that own demand. Hims and Hers wants to be the demand source for healthcare needs. So if this is the first place you go when you need something related to healthcare, that's going to be a win for them. Right now, they only have about 5 specialties that they're working on, but imagine that when that's 20 or 30 specialties, then there's going to be much more solutions that they're going to be able to provide to people. The other 2 pieces of that is, so if you're increasing the number of users and you're increasing the amount of money that they're spending per month, those 2 things are going to work together to drive revenue growth. You can see some of those trends here in this chart. Everything went extremely well through the first quarter of 2025. That was when you run into kind of a hiccup. And that's because compounded GLP-1s peaked in that first quarter of 2025, drove a ton of growth. Revenue is in the column that you see there. And then revenue pulled back as average order value declined a little bit in the second quarter because they were not selling as many compounded GLP-1s. Those were really big orders, typically ordering 6 months to a year of those weight loss treatments at one time. So not recognizing all of that as revenue, that's going to be recognized over time. So some of their other solutions, much lower cost, $30, $40 a month. GLP-1s were in excess of $100 per month, depending on what the solution was. So that was a huge win from a financial perspective. Some of those things started to pull back. Now, this doesn't mean that fewer people are using the platform. You can see that that number continues to grow, now 2.44 million as of the second quarter of 2025. But how do you get to 3 million, 4 million, 5 million? and eventually over the next decade, 20 or 30 million. But you got to add more specialties. So a specialty like testosterone is potentially going to help drive the company's subscribers, drive the revenue per subscriber, and keep building up that ecosystem with more and more solutions for users. That's ultimately the value. That's why I think this company has so much potential and it's still relatively cheap. As I'm recording, shares are only trading for about 60 times trailing earnings, and those margins are expected to go up in the future, and only about 5 times sales. So that's not all that expensive when you consider the company was growing at over 100% just a couple of quarters ago. This is still a very, very high growth company trading at, I think, a pretty reasonable valuation if they're going to continue to be able to disrupt the healthcare market. The way that they're going to do that is continually adding products and services like this. So I'd love to see what Hims & Hers is bringing to market. I think this product acceleration is going to continue in the future. That's one of the reasons they raised about $1 billion earlier this year, is to accelerate their products, accelerate the AI solutions. All that should be a win for consumers and for investors long term. But let me know what you think about the growth prospects for Hims & Hers now that they are in the testosterone business. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you next time.